years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Tonight I'll talk about the Fed meeting today and the inaction as it was expected, and we'll also talk a little bit about Friday since the markets are closing. We'll set up the end of the week. Let's get into tonight's video. Well, hey everyone. I have to tell you, I watched the presser today, the conference with Jay Powell, and he proved without a doubt that the Fed is totally incompetent. They don't have any clue what they're doing. I'll point out a couple things. I was almost going to put a clip together to play, but I'll just quote some of this stuff. I think today's meeting was probably one of the most ridiculous meetings I've watched, and I've been watching these things for 45 years almost. I guess in the old days we didn't see them, we read about them, but since they've been published and highly touted on the likes of CNBC and TV back in the olden days, back in the early 80s, I don't remember seeing any of this stuff other than reading the statement and making their own opinion, which might be better. I'm not sure these pressers are doing anybody any good. As expected, they did nothing. One of the things I have to point out here that I think is pretty amazing is I think the press asked some really good questions today. Like, if Powell was going on and on how uncertain it is about the tariffs and it's really hard to predict and all this stuff, but yet he's absolutely 100% convinced they're doing the right thing by leaving rates where they are, which was, somebody called him out on this and I thought it was interesting. And he just babbled on. He goes, this is really hard stuff, and the last thing you want to hear, I always make a joke that I always say there's things that children don't need to know. Well, we're the children, right, in this case, and there was no adult in the room. He didn't know how to answer. He didn't know how to do anything. What he really wanted to say is he has TDS. He's not going to do anything to help Donald Trump. They believe, air quotes, that the inflation is going to increase. And then he stated some things I thought were really interesting. He, numerous times that I picked up, was talking about third party, all the other analysts say this, so we say it too. So I'd say, he was talking about downsizing the Fed. It's going to take him 2 years to get rid of one person in each division, basically, 1 out of 10. So I thought it was kind of interesting because they just showed complete incompetence. They had a couple things that I picked up on also, is that he was talking about, somebody asked a question about, housing starting to get under a lot of pressure. All people want is to get mortgages and lower rates, and he's just saying, well, everything looks fine to me. We know that's happening, and I think maybe they want to collapse prices on real estate. Maybe that's part of the plan. But it just seemed very incoherent to me. I don't know what you folks think. Comment in the line below in the comment section. But I just didn't see anything here that gave me confidence. And we look at the markets. Markets finally kind of sold off a little bit. We're at 60.26. We're trying to move back down into that 59 handle again. I've just run the, so I thought I did. Let me do one thing here so it's ready when I need it. I just want to run the data sheets for the S&P. I don't know, folks. I didn't get a good feeling. I don't know how you folks felt about it. I thought they didn't have any answers. And I've been saying for a while that it's going to take anywhere from 3 to 6 months. So we have 3 months, and we don't have any signs of inflation from the tariffs. Maybe we'll get them. I wouldn't disagree that we need more time, but I don't think there's a narrative, and it goes through. Powell's just stating, I think MSM policies that are out there is what we have to be careful with. This one-time bump might materialize into more price increases across the board, or otherwise folks that have the hands on the levers are going to raise rates just because raise prices just because some things went up, so everybody's going to do it. So I thought that was also interesting. I think there's a shift going on here, folks, and I'll just say this from what I saw today, is there's a shift in the a bit in the media starting to ask a little harder questions of everybody out there and calling some people out. I mean, if you saw that interview with Tucker Carlson and Ted Cruz, he demolished Cruz. I mean, that was ugly. And I think it was valid on the questions he was asking. I think if you are supposedly the adult in the room, like Jay Powell is supposed to be, you don't give out answers. Well, we really don't know. We need more time, so we're just going to leave things like they are. Those aren't the kind of things that you hear from leaders. And Powell knows he's on his way out. Somebody even asked if he was going to stay on the Board of Governors after that. And I can tell you what that is. What he wanted to say, it depends on what kind of book deals I get and what kind of job offers I get. That will determine whether I want to be on the Board of Governors or not. So all these guys are for sale. We already know that, okay? Especially the types like almost all the federal agents, and especially the upper agency level, everything from you name it. The FBI agents go and they leave the agency, and then they get a private job, and they end up with two pensions. Sometimes there's 3 baggers on some of these guys that have come in and done service. Appreciate their service, but in the end, there's been a payoff, and I think if nothing else, whether Doge did a great job of cutting costs or not, certainly exposed some of the hypocrisy that exists everywhere. And I saw it just blatantly today, just in the Fed just having no clue. So as I said, I didn't think they would do anything. I think I would argue if we let market rates decide where things are going to be, that the Fed funds would already be 3.25, 3.5. So I wouldn't have a problem if they lower them to there, because that should be how the yield curve is structured right now with current economics. I think that would be fine. I don't think it would even be stimulant. I think they're still doing QT. He talked about that, but I didn't see any specific numbers on that. I might have missed it. I kind of skimmed through some stuff. It was way too boring to watch a lot of it. But I think that they're still doing QT, so they're still selling treasuries and putting pressure on there, and that seems to be the continuing saga around the Fed. But basically he said, we have no clue what the tariffs are going to do, and okay. But meanwhile, you're acting confident you're doing the right thing. So he must have said uncertainty, I don't know, 10 times. But what's uncertain, and these are hard. So I think I've made my point. But what I see from the Fed, and I've been saying for maybe the last month and a half, that they're completely irrelevant. They have nothing to do with anything. There's nothing they can do. Powell's out of control. The Fed's out of control. The economy is pretty much running on its own metrics right now, which is a good thing. I've told you folks just a quick little bit more into this subject, is back in the olden days, say in the late 70s and even in the, let's say, post after they got inflation under control and Volcker took his foot off the pedal a little bit and interest rates continued to drift lower for better part of 10 years. You have to remember, we were at 25%. So it was just kind of gradual, and the market worked through everything. And, we ended up surviving all that. But where we are right now is the Fed still got their foot on on the pedal a little bit. They don't want Trump to be too successful, because then that would make him look too right. So, but I think what we're looking at here is probably, I know there's a meeting, I believe there's a meeting, the next meeting is September, but I think there's also October, November. I think we get probably 25, 50 basis points by year end, and that will get the yield curve to where I want it to be. I'll plan on another session to do that. So real quick, and I should have done this up front, this is the plan because of the holiday tomorrow. I'm doing the YouTube video tonight. I will also do a Substack. I'll forward look into Friday's market, and then the next YouTube video will be Sunday night, and the next Substack will be on Sunday night or basically Monday morning New York time is when that will come out. So that's the plan for the channel going forward. But man, what a disappointment in our leaders and people in these positions, especially in the so-called non-governmental environment like the Fed and some of the others. So anyway, I'm just one comment. I just hope we don't have over this long weekend where we get anything that the U.S. gets involved in this Israeli situation, because that would be a very bad thing to have happen. All right, so let's go ahead and get into the database here and just kind of get through the show as fast as I can. And yeah, for some reason all right, I'll get it going yet. All right, so let's take a look. We're at 71.77. Not much happened. This is the sheet here. We got 441 exits, and we got basically 109 new entries. Database is holding above 71%. Because I won't be talking to you on Thursday night about the intermediate database, I suspect that intermediate database is going to continue to get some traction, just because we're holding above this around the 6,000 level on the S&P. That's going to pull more elements into the database to stay positive. So as I mentioned last night, Substack is, we really have this positive rotation that's going on there. And just mentioning Substack, make sure you get that. That'll be your best form for microanalysis, which is kendallreport.substack.com. $8 a month. Get an annual right now until the end of June. You can get $80. So sign up and get that special. Anyway, yeah, the database is just more of the same, projecting stability. No big rollover. We're not seeing any big tranches. I do believe, though, let me just come over here and let's go down below and take a look at some of these numbers over here. And we look at the sectors. We're starting to get long in the tooth on many of these. I'll just zero in over here on the far right-hand side. This shows us the duration and what the typical holding period is. So 38 of 49, 38 of 45, 40 of 35, and then 33 of 40. So we have 4 of the sectors are, 3 of the sectors are actually early in their cycle, and the rest are getting long in the tooth, which is going to basically suggest that we're likely to get a little sector rotation. Still looking for something below 68% on a short-term database, maybe 62, 58's the next metrics that we look for. And that would be pretty healthy from the database and give the opportunity for these short-term trends to kind of recycle a little bit. As it turns right now, we're actually seeing some selling coming into the markets. Right now, we're trading down 14 handles at the moment on the S&P. But the database is very stable. Even if we pull back in there, I'll go through the technicals here, and we'll discuss what I think will happen as far as the the technicals go on the main indexes. So let's go ahead and get into the S&P. Here's the what I call the creepy crawler. The 21-day moving average is coming into. Boy, this is frustrating. I'm trying to run this sheet and it's got an error. So I'm going to have to. I did notice this error. Once you run this sheet, so soon you guys are going to have this, some of you, and once you get the sheet and it runs so many times, this is you have to put a new file in place. So I'll have to make a little more effort here in a second to get that to run. But this the technicals, we're just seeing this rolling over. Looks like as we come into mid-July, maybe we get a little roll. The 200-day moving average is going to be pretty rock solid here, I think. There is some possibilities for a breach of that as we get down the road. And that'll put us into a Q3. Once we finish Q2, then my expectation is that we'll start to see some weakness in Q3 and Q4. If the Fed does lower the rates, the rhetoric around that is going to be because the economy is softening, all those type of things. My expectation here is that we'll just that won't be the primary reason. It's just going to be just adjust that front end of rates. I'm pretty disappointed. Maybe the Fed's not as incompetent. Maybe it's just Powell has lost his vigor for his job to present things in a solid way. I don't know, but I gave him an A+ going back a year and a half ago for the efforts they were making, and they do have gotten inflation down that 2%. I've also showed you that the 2% number on inflation is a total gaslight number, because that rate of 2% is just stealing a lot of money. You know, you're looking at in 5 years of 2%, which they're claiming is a good rate. There's another 10% of debasing the U.S. dollar. So they're just stealing money until the dollar is going to be worth nothing, and that looks like where we're heading over time. But let me do this. I'm going to go off screen for a minute. Let me see if I can get this thing working real quick. So bear with me. It'll take me just about less than a minute, okay? Almost there. Okay, I'm back. Looks like it's running this time. So we'll go ahead and go to the NASDAQ. As soon as this sheet's run, I'll bring it up so we can talk a little bit about it. But this overall configuration, you see I mean, I warned you folks probably 2 to 4 weeks ago. I don't know how long ago it was, that we could be looking at this pattern that's being projected is just kind of trading back into this 200-day moving average and just a flat line. I mean, this market is dead, and like I said, I should start every show off with "Summertime Blues" by The Who. That would be a perfect one. But the bottom line is there's no VIG. It looks like momentum is going to fade. There's not anything, if you think about it, and this has been my argument, there's nothing, even if we pushed to all-time new highs, that we're just going to reject. I think we got pretty close to it the other day. There's just nobody wanting to be the bag man to hold that bag above that 6,100 and a half level on the S&P. So we're kind of stuck here, folks. And so, all right. So let's go ahead. This thing's running. Looks like it's running pretty good. Hopefully it goes fine. Let's go ahead and go to NASDAQ. Same pattern, different station. Attrition being looked at here. This number here where my cursor is actually showing that PPM1 will get to it's projected to go to a minus 0.40, and that's the 1st of July. Minus 0.40 is a pretty robust downtrend. I don't know that we'll get there, but everything is being forecasted into a negative. Let me just see PPM3. Basically, PPM3 is flat, which is the 40. Like I said, I think we're going to test the 40 here on the S&P, on the NASDAQ, and potentially go down to the 200. But it's, it's going to be a slow death at the moment, unless we get. There's always something that come out of this Israeli-Iran situation that could get ugly fairly quick. So I'm just watching over the other screen to see if this thing is about done. It should be getting pretty close to done right now. I don't want to move much ahead of this area. Let's see what you folks are talking about just for a minute. Yeah, so there's a comment here. It says, what can Powell do if inflation is still a major risk? Not much at the moment. I think the markets have to run through this. I've been talking about an echo bounce for a while. Looks like the sheet did update, so I'll bring that up here in a minute. Just finish answering this question, but I don't think there's much they can do, and I don't think the inflation risk is a major risk. I would say it's more of a minor risk or a rebound when I've been talking about this echo bounce in that, and that won't be enough to send us into Bidenomics or anything like that where we have 9% inflation. We could see a 280, maybe a 3 handle. I don't expect that, but I do expect to see things increase a bit, and especially when the Fed, with them leaving rates higher and they're still doing QT, they're pretty much doing everything they can right now from that viewpoint. I think most of the issue that I had with the Fed meeting today was really communication. It's like, I'm not sure what's going on. I think the Trump administration has been terrible at communication on just about everything. I don't feel like they've been very straightforward, especially around the tariffs and some of the things that have went on in the background. They in some areas they're super transparent, and others it's just a terrible. So here we go. Let me publish this. I'll bring this over to you folks. All right. So here we go with the numbers here. So we're seeing some weakness come into the sheets here. We're down 1250. So that's approximately where we are right now. 45% weak to bearish, weak consolidation. The trend's down to a 3 out of 10. So this is what I've been talking about for a number of days, is that the trend is just kind of gradually rolling over and fading. Volatility is fairly low, And of course, this is for Friday, really, folks. So um, if we don't get any major changes, as long as we're plus or minus 5 handles or so, this sheet should be good. Maybe I'll throw something up on Twitter or something, some of the overnight markets, because there will be overnight markets until the open in the morning. Then the markets will be closed for the day. But like I said, I'll be back on Sunday night. Will be the next night, and I will do a Substack tonight. I'll do my best to set up some of this stuff. It's kind of a weird time to have a holiday on a Thursday, but that's the way it is. So we look at there's no Fibonacci projections at the moment. Other than the only thing it can pick up as projections is the S1 level. We'll come down to these PPMs, neutral. Now instead of still got a 0.26, this was in the 0.3s on ppm 3, and then we're neutral on ppm 200. So nothing there. Ranges to expect 60, 74 is R2, R1 60, 50, and then on the downside we're looking at S1 60, 18, and then S2 59, 97. I've been talking to you about on the S&P anyway that we have been getting these levels where we've been, if we go back several weeks ago, it was a high 58 handle to the 59 handle, and then we moved the scale up. Then we got 59 to mid 60s. We printed up to 61. Now we're back at that lower end of that 50 handle. Right now we're trading 60.23, down 10.75 on the session. So this is pretty much the range. I suspect this will be valid as we come into Friday, since it should be pretty muted trading from that standpoint. All right, so a couple things I'm going to do and just run through fairly quick. It'll be a little bit longer tonight than we've been the last few nights, but I'll go through, I'll bring up, we'll go to crude oil. We'll look at the Treasury since we had the Fed talk today. Then we'll do gold and Bitcoin. We'll call it quits tonight. So let's go ahead and go over to So let's do treasuries first. We did see a bit of a dip down to 440. That was the high, 435, and then closed back at 440. If you remember last night, 435, 450 is kind of the lock-in range, and we're seeing here kind of an inversion of what the equity markets are telling us, where we have a net positive where yields are going to be stable to higher, where the equities look like they're going to be stable to start to trend lower, like it just showed you on the data sheet, where our trend now is only a 3, so we're basically a negative to bearish, and it can go negative in that trend mode, but right now it's just kind of flat, neutral PPMs and all that. So when we look at the same kind of scenario here, we've got ppm1 at plus 0.07, which is neutral. ppm2 is actually negative by 0.08, but not, it needs to be at 0.15 to get into a reasonable negative mode, and similar type numbers here, 0.03 on ppm3. So there's no movement here. We still have, you can see the slope of the WTRs. This is the WaveTech WTR indicators, which are forecasting just slightly higher yields in this pattern. I think I showed you last night, if we did get some new fib targets here. We got 3 fib targets that just came in the last few days, and if I bring them up over here on the side, they are 482, 502, 514. So there is some elevated risk for yields to go a bit higher, but we're not getting confirmation from the PPMs. As I told you, when you get these fib targets up, you want to watch the PPMs to see if there's any momentum that is projecting in the direction of those targets. And we also have downward targets. Sometimes we get both upward and downward targets. On the downward targets here, we're actually looking at bring that up. 421 as extreme all the way down to 409 down here. And the previous forecast here was right at 417, 420. That would be an extreme move in this configuration. All right, let's do crude oil. So crude is starting to fade. As I mentioned last night, that this would, and I guess the best way to put it, would suggest that we're going to be stable and then start to fade back. But we've got decent angle of attacks here, so there's substantial amount of support down around these levels, around 71 and a half or so. So we're going to have some stability there, and it looks like this is going to stay into July. And I think that both sides of the Israel-Iran situation of actually saying that they're not going to give up. Maybe when they run out of missiles, that will happen. And I mentioned earlier that interview with Ted Cruz and Tucker Carlson. I thought was interesting because Cruz was saying, "Well, we're already helping them," and Carlson was like, "What? We're doing what? Why? How come we don't know about this?" Anyway, I thought there was a lot of got you moments on that interview. I didn't watch the whole thing. I saw some clips, but this is suggesting that this thing will diffuse and will start to come back in probably toward the 71 to 68 level. I don't see a big explosion, if no pun intended there. If you look at the this bar where my cursor is right now, we got an RTXL signal, which suggests we should go sideways for 1 to 2 days. We've done that. Negative to sideways, we've done that. So there's a possibility of getting things going, but something else is happening here. Let me just bring this up. You'll see this big bubble formation, and this is what I talk. This is the volatility bubble, and until that needs to normalize before we will get the next directional move. So I suspect this is daily. It's going to be another 5 or 6 sessions at least to normalize. So those of you with the indicators, just watch this, put the market grid on there and watch for that to normalize over the next couple of days. See where we are on Friday after the action on Friday. So do that. If you don't have the indicators, kendallreport.com/indicators, find out how to get them. So yeah, let's just go ahead here. There's nothing that looks like like I said, looks like stabilization at these levels here, staying above 71 and a half, potential moving back to 68 as an extreme right now. Upside is right around the 70, maybe 75. We're looking at in the market grid. 75, 68, 77, 08 would be the extremes within the market grid. All right, Bitcoin, and then I'll see what kind of questions are out there, and we'll go from there. So interesting, Bitcoin just got some new upward projections. We're looking at, and looks like we've got a bit of a V bottom on the PPM1, so there's a little confirmation. The targets on the upside, 112,900, that would be a new high. And then above that, 116,900 and 119,250. So those are some new objectives with PPM showing a bit of a positive mode. So a little bit of resistance over here at 107 and a half. When I run the sheets tonight, you get the Substack. This will all be defined pretty well on the breakout points, and the probabilities will be on there as well. So that's an interesting development from that standpoint. Downside risk appears to be minimal, and that's what I've been talking. We've been hovering right around these moving averages. All 3 moving averages, 10, 21, 40, are all pretty much in the same value range. Let me just bring that up so you can see it. So yeah, the 21 105 780, 106 77 for the 40, and the 10 is 105 106 345. So they're virtually all the same values here. Okay, folks. Let me see what you folks are chatting about. Yeah, just rule of the channels. Don't promote other analysts on here, David. That will get you banned. Let's see here. See if there's anything else here that's up here. Yeah, there's two things. Housing prices probably do. Those of us that own houses or a house would like not to see that happen too drastically, right? So you got a lot of homeowners who disagree with that. So they would probably be more like bring mortgage rates down, and that will bring the cost of owning one down anyway. Always hard to get someone to do that. Well, listen, folks, I will see you Sunday night. I'll write a Substack tonight. Appreciate everybody showing up, and hopefully I gave you enough context to get you through Friday, and we'll talk on Sunday night. That will be the next time I see you, folks. Have a great holiday and good day trading. See you on Friday. See you then.